Hello, friends. This is Chandrakant, and I welcome you all to the Spotlight. And today we have Mike Bradley from UK, who's going to talk about some of these offerings that he has in the insurance space. And before we start discussion with Mike, I must tell all the viewers that in the current budget, our honorable finance minister tabled the budget and said that the increase of FDI, which is foreign direct investment into India, specifically in the insurance sector, is going to go up almost up to the extent of 74%. So let me invite Mike to discuss on the subject. How are you, Mike?
I'm very good, Chandra, and yourself?
Doing good?
Excellent. The only problem is I've got monsoon rains today in south of England.
Come on, Mike.
It feels like Mumbai. It feels like Mumbai in September. No, it's not quite so bad as that.
I'm sure because monsoons usually is a byproduct of the hot Indian summer, and it's month of February, so it's just a normal rain, I guess.
Well, yes, this is it gets unpredictable this time of year over here because you can get 2 weeks in February where the weather is stunning sunshine, but today is definitely not. We've had 3 or 4 days of sort of wet weather down the south coast. However, it's much better than north of, shall we say, Manchester. When you get north of Manchester, they're having it cold and snowy.
Okay. So I think we are going to heat the whole environment. Let's discuss about this proposed increase of FDI in the insurance sector in India.
Yeah, okay. Well, I think FDI, not just in insurance, is interesting. It's across the board because there's always the challenge when you're deciding to enter a market as to how you go about it. And so, there are several different models. There's an agent model where, to start with, you can have maybe an appointed salesperson on the ground somewhere, or maybe a few. Maybe you'd have somebody in Delhi, somebody in Mumbai, somebody in Bangalore, somebody in Chennai, Kerala, if you're lucky with the nice food and the weather down there. But the challenge with that is always that it can be a bit of a tax challenge. Does the person work for you? Do they not work for you? How their tax is calculated? So the agent model isn't necessarily a good one, particularly the larger the organization, the more tricky that can potentially become. There are, of course, organizations that can help with that, setting up in India as a land and expand. I suppose the next model is you find an existing reseller. So if you find in the tech space, you find a reseller who can sell into your particular technology or sector or business. And that can be very good. It's a great way to gain rapid growth into a market, low cost. You don't have to necessarily have an office base, but can work through partnerships. Through the reseller networks. Then I suppose there's more formal partnerships and joint ventures where you're working maybe with a larger company, say a Tata's or a Infosys or something, and then you're putting together a 1 and 1 equals 2 relationship to go to market. Once again, fantastically efficient and effective way to go into a foreign territory. The next one is, I guess, where the FDI situation comes in, is slightly more complicated because then it becomes a question of, and previous to the change, I think generically it was, I think you mentioned it was like in the 20s, a 20% share or something. Insurance, I think it was 49% share. Well, if you're a large global company, there's not a lot of interest in putting a lot of money into something if you don't fully have control. And so and in other parts of the world I've worked in as well, I know that corporates have made decisions where they've said, we are not going into this marketplace because we don't have full control. If you're spending several million rupees, several lakhs of rupees, then it really becomes tricky to decide if you're going to, is it worth your risk? Because it's all about managed risk, particularly in insurance. It's all about the risk that you're prepared to take in order to get into that marketplace. So I think it's a very good idea to attract foreign investment, is to ensure that the foreign investor keeps control of their investment. So I think it can only be positive.
So I'm not too sure about changing the structure of the board of directors. I think we will come back on this subject and discuss this again after a few days once that is crystallized. But I must tell you one piece of very important information which is related to the insurance sector in India. There are about, I mean, if you look at the general insurance, it's a big market, primarily controlled by the 3 or 4 government agencies, government owned companies. But the life insurance, which is related to people, it's a huge, it's a huge business. And
There's a lot of people in India.
absolutely. And, it's crazy because, what happens is that there are about 28 life insurance companies. There are Indian companies and there are foreign investment companies also. In
Yes.
partnership, they are running this business. However, there is one company which is the oldest and the largest in India. It started even before the independence of India. It was there during the British Raj, and that company is called Life Insurance Company of India, in short, LIC.
Right.
And this company controls 85% market share. So you can
Nice if
imagine,
you can get it.
right? The whole surprising fact is that 85% is with one company, and remaining 15% is with 27 other companies.
Right. Yep.
So when AIA, AIG, ING, MetLife, when they project their numbers with Indian number of say something like 10%, 20%, they are controlling only 2% of the Indian market. So I think with this FDI, this situation has to change. And the other news is that the LIC is also being planned to be privatized. So it will get into stock market and the shares will be
Right.
traded, which is not possible so far. So a lot of changes are happening in the insurance sector. And if the budget, which is on the table right now, if approved, then this insurance sector will open up, opening a lot of foreign investors to come in and invest in this area. And why I'm talking about this to you, Mike, because in your ecosystem, there are a lot of insurance players. Maybe they want to hear about this, leverage the situation, plan it. I think the opportunities are immense.
I think you're right. We've got a sister ecosystem called Insure Scale Up, and that's all about supporting the matchmaking of innovators with incumbents. Obviously, your existing incumbent, if you like, the one with the lion's share of the marketplace. There's only one snag when you've got that much of the market, is the only way is pretty much down, unless that company or unless the marketplace is expanding. And I think it probably is in India, because I could be wrong and you could correct me on this, I'm sure, is that there will be a lot of the new middle class in India who will be looking for insurance products who possibly previously they weren't. I think the middle class in India is now or going to increase to 40 million people. That's a massive market opportunity. But I also think that the interesting point there is depends how innovative your large incumbent is. because if it's what we're seeing elsewhere is that the insurance market is going through a stage of disruption, a bit like the banking sector went through 10 years ago after 2008, 2009. There are a lot now of disruptive players in the banking sector that are addressing markets, addressing customers, B2B, B2C, in ways that weren't being addressed previously. And I would perceive that the same thing could happen in the insurance market from what you're saying in India, is that there's one big player probably doing things in a fairly traditional way that has to look over its shoulder and say, well, actually, this new emerging middle class, are we going to appeal to them? Or are we going to continue doing our traditional model? We've got a market share. And as I often call it, the corporate AAA sets in. I don't know if I've mentioned that before. It's one of my favorites. But corporate AAA happens when you've got a very large company or a very large business. Doesn't have to be the major player. It's just got to be a very large organization. Corporate AAA is corporate amnesia, which is where the company is managed by spreadsheet, and it forgets, hence the amnesia, it forgets that the customer makes up the spreadsheet, which is fatal, because in a growing market, in a growing middle class market in India, if you forget that actually your traditional model isn't going to appeal to the new middle class professional people, then you're going to have a challenge, because somebody's going to come in and say, well, actually, that organization is not addressing this client base. We'll go after the new techies, and we'll go for the 10 million of the market. And before they know where they are, their market share will shrink because the market has grown and they're not addressing it. Corporate amnesia. So then the second problem, of course, is corporate asphyxiation. Corporate asphyxiation is when you've got such a large company and they meet in a board and they've got the ivory tower mentality. They've gone so high in the clouds that they no longer breathe fresh air, hence the asphyxiation. And what they actually need to do is maybe come down from the 7th floor, go into the 1st and 2nd floor, go talk to some of the staff on the customer support desk and say, what are our clients actually saying? What are they wanting? What are they moaning about? What are they happy about? And actually start addressing the client needs. And heaven forbid, they may even have to go out and talk to some customers and find out what they want. And this new middle class, what are their needs and desires, and how can this organization or a new innovator address that market better? And then, of course, the third of the corporate AAAs is corporate arrogance, which is, oh, we've got so big, we've got such a large market share, 85%, we'll be here forever. And then, of course, the innovators start coming in and saying, yeah, we can have a piece of this. A bit like, I'm visualizing the old Pac-Man the Pac-Man electronic game that starts eating away at the market share. So, I think it's very easy to get into that mentality, and that the corporate graveyard is full of companies that suffered with corporate AAA, in my opinion.
Well, I think you're right. But let me clarify about LIC. The foreign insurance companies are not new to India. They entered in 1986. They had sufficient time to launch this big player out. But, they're still the same. They're still struggling, competing against this large player, because this LIC, Life Insurance Company of India, I have dealt with them personally. They're very professional. They're thorough professional people. They have the highest claims, and they have all the IT systems. In fact, you will be surprised. I mean, if we talk about 85% market share and
Mm-hmm.
multiply that into number of people, there are they have 40 data centers because they have so much
Right.
data that
Yep.
one server, there is no server to manage their data. So they
Yeah.
have,
Data is the new oil, of course.
right. So they are not a easy player to deal with, even with this
Uh-huh.
FDI increase, because they are very smart and they are not living in ivory towers, as you mentioned. I think
Well,
that is
that's
one
good.
point I just wanted to clarify. But the
Mm.
second
Mm.
thing is about the middle class. The emphasis for the Modi government is to uplift the people who are below poverty line or below or the lower middle class. I would say
Yes.
the numbers are
Uh-huh.
huge. They are almost like
Yes.
25 to 30% in India. And if you look
Mm-hmm.
at 1.3 billion population, 30% of that is like 300 million people.
Yes.
So emphasis is being given to ensure these people. There are a lot of plans. There is a health insurance card which is given out. There are low
Mm-hmm.
micro loans are given out, and then they are insured. There are pension plans which are being rolled out specifically for those people.
Yes.
And this is a new entry. This is a new entry because the upper class and the middle
It's a
class.
new market.
This is a new market of 300 and odd million people,
Mm-hmm.
and government is very highly focused on bringing them. In fact, 2 years back, India ran the world biggest financial inclusion plan, and they opened something like 80 million accounts in banks
Mm-hmm.
to bring these people into the mainstream, because they were not
Sure.
banked at all for last 70 years. So for the first time, they have seen banks,
Yes.
so
Yep.
this is the market. So in your ecosystem, if now there is going to be FDI, which is going to be up to 74%, and if there are people who are willing to come to this market with huge numbers, I think this is a
Yes.
time to look at.
100%. I agree with you. It's a massive opportunity, and with the change in the FDI rule, there's now an incentive for those other players who weren't in that marketplace to come in and address the new market. Because there is a good reason for them to be investing and delivering solutions that are appropriate for that growing uh, demographic within the and obviously there's going to be lots of other spin-off opportunities around that as well, because as these people, and it's a very good idea to give people a better quality of life and deliver that, bring them into the digital fold and into the digital world, because they can access information, education, finance, health much more uh, in a much more cost effective way than they have done previously. And that obviously is going to improve the level of demand for education, for services, for products. Social improvement is good for it in every way. So I think it's good. Is the India has always been an interesting market because it's large. There's a lot of people. That's a massive market. Even better when that population has more spending rupees in their pocket. And the more people are lifted out of poverty and into a better quality of life, the better the demand for everybody and demand for services. So it's only going to become more attractive.
And ease of doing business has also improved quite a bit. It is not the best, but it is improved quite a bit because Indian government ran a biometrics based KYC program. So all the
Mm-hmm.
Indians now have the iris and the fingerprints connected to a number, and this number
Mm-hmm.
is basically identified. So it's a lot easier for business people like insurance banks to track people in case of default.
Yes.
um,
Mm-hmm.
at the same time, there are new products being rolled out based on these identifications, which are related to, farm loans, farm insurance, which is a big segment, which
Yeah.
is
There's more
contributing.
stability. for businesses, because otherwise the risk is you can't quantify the risk. But now you can actually, better identify the different demographics and the people, the better you can address their needs.
Absolutely. And for past couple of years, India, because of the sheer numbers, are the world leader in digital payments, especially in the area of micropayments. And the government is
Mm-hmm.
trying to see that cash flow is reduced and everything comes on the digital payment. There are a lot of incentives being announced. So I think everything is getting into more accountable area of our finances. So it will be a
Yeah.
lot easier for people who want to invest in this market, in terms of setting up, and in terms of risk factor, which they would have thought
Yeah.
20 years back are not existing now.
Yeah, I think it's good for both the private sector invest companies, but also for the public sector, of course, because if it's much easier to track electronic payments, so it has the potential to uplift the accountable numbers, which means that there's more tax, but that also can get them reinvested back in to bring more people out of poverty. So, the route, my view is the route to stability and growth is to give people more education, more money in their pockets, and that in turn increases the need for demand, increases the need for products and services, increases revenues, profits, increases taxes. So it's a positive way forwards. And India, being the entrepreneurial nation that it is not going to miss those opportunities, I'm sure.
Absolutely. In fact, we are living in a very exciting time when we are world largest democracy. So there is a
Mm.
rule of law, um, highest digital payments. Uh, there are a lot of scope for insurance, because right now we have the general insurance, which is related to fire and theft and also life. There's a
Mm-hmm.
lot of room for insurance to improve. I'm not saying that it's the best, but I think uh, there is a room for innovation, which can come from countries like UK and more advanced countries like United States.
I think innovation's a good word to talk about as well from an insurance perspective, because there are, with the new advances in the digital field, there are many more opportunities for insurance. For example, solar power, environmental damage, infrastructure controlled by IoT devices, the cybersecurity risks and rewards, the ability to take on a project but have an insurance cover to cover the risk. Um, COVID, the ability to cover a venue with a biosecure insurance policy. All of these things are new areas that are available for insurance companies to come in and support the development of innovation and growth. So, I believe the traditional markets, yes, they're there, and traditional markets are growing, but the whole range of other areas where the opportunities are growing, the investment is coming in, but then with the investment comes the risk, and the risk needs to be covered. That's another area where there's significant disruption and opportunity. Certainly, we're seeing this through the insure scale up area, as well as a lot of the innovators on scale up arena are supplying technology services and tech products which actually require an insurance wrap that has not previously been addressed. So there's great opportunities. And of course, there's always a lot of opportunity between the UK and India. The living bridge is alive well. And although we can't walk across it and greet each other at the moment, it's definitely something that is happening a great deal. And we can make the most of it through
Absolutely.
collaboration tools and digital tools like Scale Up Arena, where the whole objective is to be able to connect to communicate, to cooperate, collaborate, and come up with deals that we can close.
Certainly, Mike, and I'm sure a lot of viewers are listening when we are making these points. And both sides, UK and Indians, can leverage the strength of each other and grow together.
I think that's absolutely right. And I think there's a ginormous opportunity between the UK and India at the moment around manufacturing. I think, in India is a great source of manufactured products, high quality, innovative, technology driven, and the opportunity to source products from India for the UK, but also other Western economies and advanced economies is vast.
Yes, Mike. So let me give you the split of GDP. India is now 3 trillion in terms of GDP, which is at number 5 globally. And if you look at the PPP, which is purchasing power, we are at 10.5 trillion. So that makes us number 3 in the world. And now, if you look at the GDP split, where the GDP is coming from, 16% is coming from farming, agriculture, and then about 25% is coming from the industries, which are different industries like chemical, etc. Surprisingly, manufacturing is contributing only 14%, and remaining 50% is coming from services. So you can imagine that manufacturing can grow, and services there is a huge skilled labor here in India which can be leveraged. So it's
No,
a
I
big
think you're
services
absolutely
market.
right. Yes, again, I think the FDI rules changing, not just in insurance, but FDI generally, will also encourage a lot of international organizations to say, actually, maybe we should operate either an outsource or open our own factory for manufacturing in India. And I'm sure you've got development areas of India where there's good incentives for people to move to a particular area and establish a operation where I think there's 5 major areas that are sort of development areas. So there's lots of opportunities for that. And hopefully things like the JETCO initiative will help to expand that. The joint economic and trade agreement that we can bring together and optimize for our mutual benefits.
Yes, Mike, I think there is a lot to talk about. There are different corridors. Tesla is coming, but I think we can leave it for the next session. And today, it was pleasure discussing specifically about the FDI route, which is allowed in insurance space. And I think the opportunity is quite exciting for the UK players to look at India as a market.
Yeah, we'd be very keen to try and forge some bridges and forge some links for you if you're looking at that space and feel that there's an opportunity. I'm sure we can introduce some relevant players for you, innovators and incumbents.
Absolutely. It was a pleasure talking to you, Mike, and we'll catch up next
Always
Thursday.
a pleasure to you. And look forward to our next session.
Bye-bye.
Take care, Chandra. Have a good day.